Hey everybody, this is Jason from Against All Odds Research. We are with Ian. Ian and I will be running this weekend report from now on Fridays. So basically what we're going to be doing here is going through a few charts, things like silver, gold, commodities, stocks, futures, anything across the board is on the table. I really don't want to keep us put in a box towards anything. I think both as a technical trader, as a trend trader, like we trade it all. Like there's nothing that's sitting in front of me that I'm not going to trade. So I think here's the spot where we can just kind of talk about what's important that's happened this week and what we're seeing going into next week and through the weekend. So you guys can put together your own trading plans on the weekend. I always say how it's so important to be able to put in a trading plan when the market isn't moving. So how you doing today, Ian?
I'm doing excellent. That's a great point. That's a great point, Jason. You don't want to, you don't want to be trying to figure out, how to land a punch when you're in the middle of a fight,
Yes.
You
Yes.
want to you want to be prepared. You want to train.
Exactly. You want to be ready to move any direction you need to, but I think the most important part of it is that when the market is open and things are jumping around and they're in your face and they're doing this, that, and the other thing, you can't really make good decisions. It's kind of why, like, when I talk about a trade, like, I always make the joke that, God could come to me from the future and tell me that, hey, Jason, I see this trade's not going to work out. And I'm going to say, well, that sucks. My signal's long. And why I say that is once your brain is in the trade and once you're seeing money jump up and down, your brain will create any reason that's possible to get out of the trade and take the money. Like you're it's green. It's kind of like if you bought Bitcoin at $100 and went to $200, you'd think take the money and run. Great trade. But if your system's still long, it's still long. And so that's the only way at least that I know, that I am able to kind of hold on to these trades and run and hold on to these trades over a long period of time. I just think in general, you're not thinking correctly when the market is open, but on the weekend, the market's closed. You can get your brain kind of together, especially as a futures trader. It's even at night, people are like, oh, you could just look at it at night. Nope, not really. Something's going on in China, something's going on in Europe. It doesn't matter. There's always something going on in futures. So I really try to use the weekend for my research.
Absolutely. If I'm looking at a chart, it doesn't, I can find a reason to jump into a trade. So if I don't have my trades already lined up before Sunday night, no good.
Yes. And so that's why I think the weekend reporting is so important, just so you can kind of have an unbiased view at it. And there's also the other part of it, whereas if you're a trader and you're like, kind of putting on trades, or you're doing poorly or you're doing something bad, you can also get out of those trades and then kind of hang out during the weekend and reassess your research. I think so many people don't understand that about trading.
Yeah, cut those losses short. If it's not working, don't force it.
Yes.
Don't force it. Take a step back. That's the thing. The more time I spend in the markets, the more the markets continue to prove to me that there's going to be another opportunity right around the corner. The markets are always going to give us excellent opportunities. So just taking a step back, cutting those losses short, not forcing trades, and knowing that, hey, look, if this one doesn't work out, that's all right. Lots of trades don't work out. There's going to be a good trade right around the corner.
There always is. I think that's the thing that I see the most when traders having conversations and people talking about trades they're obsessed with almost or stuck into. And I think that's the way our brains work, like there's an interesting fact about Sigmund Freud where like people really don't know how electric eels or eels in general really reproduce. And so because of that, Sigmund Freud at one point was just so obsessed with it that he was like talking about how he was every time he closed his eyes, he'd just see eels, because he just couldn't figure it out. He was obsessed with it. I think that's similar like to trades. Like people have a oh, this has to go down, I need to short this, or this has to go up, I need to be long this, or I've been in this short for so long, like it's gonna turn around at some point, so I'm just gonna hold on to the position. There's nothing wrong with just getting flat, and then coming in, because that's what you were just talking about. The opportunity loss of that next trade is also involved in that. And most people don't think about that, where they're like, okay, I'm thinking about this trade every day. It's all my focus is on this one trade. And it's like, honestly, if you feel that strongly about a trade, a ticker, a commodity, an equity, you should pull it out of your portfolio. You shouldn't even look at it ever again. You should get rid of the trade. You should take it off your screen, because you obviously have an obsession over it. It's very easy to do, especially in stocks. I was talking to my nephew's been interested in trading. And as I was talking to him about trading, he was bringing up some really good points. And I was like, well, when you start trading, I think a good idea would be to trade the ETFs. Why trade the ETFs? Because there's no names on it. Basically, if you buy XOK, you're buying Apple and Microsoft. Like, really, like that's the truth. But your brain's not like going like, oh, I have an Apple phone, I have a MacBook, like your brain start piecing it, or this new thing I know, this new phone that came out is awesome and I love it. Your brain's not going to piece that together if you're in the individual stock. But if you're just buying a sector, you're going, I'm long tech, along the tech sector. And most of the time, if you're looking at large cap stocks in general, those big ones that are moving the market anyways, that you're thinking about buying, like they're all going to rise with the ETF or that sector anyways, or they're going to go down with that sector anyways. So you're not really losing or missing out by doing that. So many people feel that way, like they're missing something by doing that, but it's like, no, your just brain is kind of taken out of it. And then once you get to a point where you don't have biases as much and you understand trading completely, then go trade the individual stocks if you want to. If you're one of those crazy people who likes to trade those.
That's good advice. I've never thought of that. I've never thought of just starting out with the ETFs. But yeah, I like that. I like that approach.
When I first started trading, I mean, I remember looking at certain, like having extreme biases for individual stocks. This company sucks. I could value it. I could write a thesis. This was when I was more reading security analysis books. I wasn't a technical analyst by any means. I understood charts a little bit, but not to the degree I do now. And so I would sit there and I'd come up with these huge ideas. I gotta do this. I gotta, this thing's gonna go down. I hate this product. This is stupid. Social media is stupid. Like whatever you've decided, your brain's gonna put there. And that's not like nowadays, I'm like, that's not what makes a stock go up or down. Like none of the things I listed what makes a stock go up or down. And I don't know exactly what makes a stock go up or down, but I do know most of the time that trends exist and they persist. So if I can stay in something that's in an uptrend and buy things in uptrends and sell things in downtrends, and whatever my reasons are past that, I'm going to make more money that way than just being, I have this bias because of blank.
Right. Absolutely. Yeah, it's it's tough, and I think what's really important to understand for those traders out there, those budding traders that have yet to blow up an account, is if you get caught in a trade, and if you get caught up in a name or a commodity or whatever it is, and you keep chasing, you're going to run down your capital. Capital, it's your inventory.
Yep.
And if you don't have any inventory, capital, you can't trade. And there's nothing worse than being stuck, not being able to take a position when a market that you have been watching for months finally starts to move.
Yes.
But you can't trade it because you're chasing some market and you got caught up, getting chopped up, trying to catch something else. Been there, I've done that. I had to learn the hard way more than once. But yeah, it's important to understand that. And And if, for those of you out there that, watching this, that haven't experienced that it yet, and you do ultimately have to deal with that reality, take a deep breath, understand that it's part of the learning process, pull yourself up, and just keep grinding.
Yeah, I mean, I think when people talk about paying tuition to the market, that's true. You do pay a tuition to the market. You do have to spend money, time, effort, energy, all those things go into the market. Absolutely. But what I think is important that people don't talk about a lot is the mental capital to keep trading. Like
Yeah.
there's the point of, I could tell you that through back testing, I know that even during, like, people will say things like, during a drawdown period, I trade smaller. During a drawdown period, I do
Yeah.
this. Well, I know from back testing that most of the time, especially if you're systematic, that will make you lose money. However, there's two sides of that. And I do the same thing, even though I know and I'm mainly systematic. I still understand that there's the other side of it where it's the mental capital that's starting to drain on me. Because
Yeah.
at a certain point, I will start to make mistakes. I will start to act stupid. I will start to do certain things that are not like me. So getting flat and just going, okay, where am I fucking up is
Mm-hmm.
really, really important. Probably the most important thing in trading. Because I think it's very hard to look at yourself like that and understand, like, trading isn't a thing where being right makes you money.
Mm-mm.
And I think that's the hardest thing to grasp in this. Being right doesn't make you money.
Yeah.
It sounds really cool. You meet new traders and they almost want validation in a way where they're going to put their trade idea. I thought this and look how right I was, or blah, blah. And, does that mean they made money? No, it doesn't. So you could be right on the NASDAQ trade, or on the right side of it, or you could have tried to buy it and sell it at perfect spots and all this stuff. Whether you were right or wrong, how did you trade it? Were your positions at the right size? Were your positions too small? Like, or were they too big? You could have plenty of traders I've met over the years who've just chopped around for years and years and years, and it's because they might have the wrong position size. They don't understand the volatility of each position and so on. So all of these things are really important, but above all else, it's your mental capital.
Yes.
Do you have the ability to put that next trade on? If you're sitting in something that's been going against you for 6 months and you go to sleep at night thinking about this trade, your mental capital is gone. You are not going to put on another trade that's going to make money. Yes, at some point it's going to give you some of your money back. That's awesome. Great. Cool. You got some of your money back. But just getting out of it earlier to keep that mental capital is more important than anything else. It's more
Yes.
important than that waiting for that thing to happen that you thought was going to happen. You know.
Yeah, I love that. One, Being Right or Making Money, great book by Ned Davis.
Mhm.
That's a
Yes.
really good one. And then Peter Brandt often talks about emotional drawdowns,
Mhm.
which I mean, it right in line with what you're talking about in terms of mental capital.
Yes.
So you have drawdowns in your account, and you have drawdowns emotionally as well. Like you said, if things aren't going well, don't force it.
Mhm.
Take a break, step away, go for a walk.
Yes.
I know you go for walks. Sean McLaughlin, options trader, a strategist at All Star Charts, is a big fan of going on walks. He starts his day off with a walk, but
Yep.
he's definitely, if things, if he's not in the groove, and he's making mistakes, and he's going on tilt,
Mhm.
he'll hit the trail.
Yeah.
Um,
The John
just
Meadow phrase on tilt.
on tilt. Yeah, I mean,
It's a good one.
what's funny is definitely in the early years, I still have my moments. I mean, I still have moments where I'm
Yeah.
definitely on tilt, but I think in the beginning, I was probably on tilt for like months at a time.
Forever on tilt.
Seriously, I think I was on tilt for first maybe year and a half. I don't know. It was bad, but
It's true though. Like you just do. It's not a thing where it's like somebody does it right, somebody does it wrong. It's just everybody, even you've been trading for a long time, it's going to happen. The only thing that I say that's different about a trader who's been trading for a long time is you recognize it. You see it. Like you're like,
Yeah.
oh, I am going on tilt. Oh, I am doing this. Like, oh, I am fucking up right now. Oh, I am like completely obsessed with this position. You know. So like all those things like happen and you start to be able to recognize it in yourself over time. But at the beginning you just can't. Like it takes time because there's a you read trading books and you think about conviction and you hear about these stories and you're like, well, trading is George Soros sitting in a room thinking about shorting the Great British Pound and making all the money in the world. Like that's what people read. And if they read
Yeah.
that, they're like, shit, okay, well, if that trade made all the money in the world, then I'm going to sit here and I'm going to come up with a huge idea. I'm going to put all my money in it and make all the money in the world. And really, like, they're not understanding. Like, George Soros had many different traders under desk. That wasn't 100% of his account in that trade. There was leverage there. There was stops there. There was, all of these things that make sense. And maybe he risked a little bit too much on it. And also, you don't hear about the other times about Soros. The
Yeah.
bottom 1987, the market is crashing. Who's buying the crap out of the market? That was the question that Stanley Druckenmiller had. He's on the phone with George Soros. He's talking about how great he did, switching his long position to a short position and during the crash and how like amazing it was. And he's like, yeah, I think we're close to a bottom. Somebody recklessly bought the shit out of the market today. I don't have any idea who did that or why they did that. And then Soros just gets off the phone. He didn't know that. Druckenmiller didn't know that Soros was the one buying the shit out of the crashing market. So like, like you don't understand these things. Like that's Soros on tilt, like that's
Yeah.
like that's these great traders that people think about. Like they do the same thing we all do. And that's totally okay. That's
Yeah.
what it should be. Like you're never going to be completely normal and perfect trading markets. You could get to a point where you're so disciplined systematically that you're close to it. But you're never as a discretionary trader, there's never going to be a time where you're like, okay, well, I've got it all figured out. I don't act up anymore. I don't have impulses. I don't put on too big positions, like
Yeah.
all those things that's impossible.
Well, even like, a lot of the great commodity traders, or futures traders, from the 70s and 80s, like Michael Marcus,
Mm-hmm.
Bruce Kovner and all those guys that worked at Commodity Corp. Um, I was just reading a paper on Michael Marcus. You shared it with me the other day.
Yeah, from George. Yeah.
Yeah, and it's great. And there's it doesn't go in too much detail about it, but there's a little section on Commodity Corp, and Commodity Corp was all about taking risks,
Yeah.
like big risks.
Huge.
Getting those 10x, 20x returns, but with it came consequences. And I don't, I can't speak to any of the individual market wizards who may have, blown out at any particular time. I don't know, but it does mention that there were traders at Commodity Corp that did blow out and then would have to petition, for new accounts.
Mhm.
Yeah, it's don't know where I'm going with that one, but risk management and just the awareness of the emotions involved in trading are really important.
Yes. Yes.
Critical. I say crucial. They're more than really important. They're crucial.
I think that's the point we're really talking about more than anything is your mental health, like
Yeah.
it's so intertwined with trading and nobody would believe it. Like I can think of some of my best times of trading was just when I was in a good mental space. Like
Yes.
even being sick was something that wasn't going to throw a wrench into my life. Like somebody dying, it wasn't going to throw anything into my trading. Like that's a really strong mental space that you're in at certain points. You're not in that forever. Like and that's the thing. Yeah, I have to recognize, like, I'm not always there, and that's okay. But how do I stay there as much as possible? Well, I try to journal. I'm a recovered addict, so I still go to meetings. I go to actually help out at certain rehab centers and speak to new people who are just coming into recovery. Like, those things help me stay on my path, but everybody has to figure out what that is. Obviously, like we talked about earlier, exercising, going for a walk, find something that you like to do outside of trading, because if you're just sitting there all day, I used to talk about a lot, it's around noon. There's nothing really going on in the market. I don't care if you're even a day trader. There's nothing going on from about 11 to 2 o'clock. If you're a day
Right.
trader, you're trading from about 9:30 till 10:30, and then 2:30 to 4 as a day trader. That middle time there, if you're sitting there staring at the markets, and not to mention, like, traders know this, like back in the day, they knew about it as floor traders. So floor traders would go and they'd push the market around noon, because they knew there wasn't a lot of volume, and they knew people would get stuck in these. And so if you notice, there's a lot of fake whipsaws around that period of time. And so, there's nothing going on. So go for a walk, go do something. I like to go to my backyard and hang out with my bees, like I have a bunch of sunflowers and weird flowers, and I go to fucking Schrader's and find flowers, and I don't really even like flowers, but I love bees, so I buy flowers that they like, which are fucking purple ones, and I go get those, and I put them in my backyard, and I go walk around and look at all the fucking crazy ass bees in the backyard.
That's awesome.
I do
I
that for
love
like
it.
20 minutes, and just get out of your head, like,
Yeah.
get a clear head and come back, and there's plenty of days as a trader, you're never going to be it's not a straight road, right? Like, it doesn't look like the chart you want, like, always, especially when you're new to trading. So, you're gonna have, like, especially me, I have very long-term positions on. There's days where all of them are going against me. It doesn't matter if I'm long, short, sideways. Like, there will be days where the correlation of my positions will all kind of go against me. And on those days, like, I'm going to probably go in the backyard and hang out with the bees, or go someplace and not just sit there staring at it all day, because that's going to drive me nuts. And then, not to mention, like, I know, like, are the positions breaking trend? Has anything majorly changed? If I can check out those boxes, like, I need to walk away.
Yeah.
And so, simply just understanding, walking away, getting your mind together, and then coming back later. Some days that's a 1 day move sometimes. Some days it's a correction that happens a few days. Maybe it's a couple weeks, but these are things you have to just understand if you're going to be a trader, that you're going to have to handle that shit. If you're not a day trader, maybe a day trader, it's different. I can't speak to that. But as a swing trader, position trader, commodities, futures, you're just going to have to understand those things.
Absolutely. I actually happened to me today. I have a few tactical positions that are all pretty much tied to the dollar right now. Betting on dollar strength.
Mm-hmm.
One of them is, a cute short silver trade, and silver's running back towards a level where I want to take profits. It's not there yet, but it's close. And it pulled back. It bounced a little higher this morning.
Yep.
The euro bounced a little higher. The Aussie bounced a little higher, and everything was moving against me.
Mm-hmm.
Right. And it was what, 9:30, 10 o'clock in the morning. And I was like, you know what I got to do right now? I got to go for a run.
Yep.
And that's what I did. I went for a run.
Yep.
I stopped and saw the kid. I hung out with my youngest one for a little bit, who by the way, loves bugs, loves bees.
Good.
He's in the backyard, like constantly like finding frogs and bringing frogs to his mom.
Oh, cool.
Roasting her out. It's great. It's great. But yeah, it's exactly what I needed to do. And I needed to release that steam. I come back, and sure enough, my trades are back in the green. And, if I would have continued to sit and stare at the screen for another 30, 45 minutes, I would have come up with a reason to, close out my stops and go ahead and just get out of the position.
Yes. And you always,
yeah.
Oh, that's cool. That makes a lot of sense. And I think that's something that's incredibly important to understand is, you can't whatever your positions are. Everybody's going to have different ideas. Everybody's going to have different positions. I don't care what type of trader you are, your fundamental, your technical, there's going to be reasons to be long. So like depends on your time frame, right? Like the NASDAQ long-term time frame, you could be long it. Short-term time frame, you could be short it. Like all of these things are going to be important. But what's important about all that is just understanding your methodology. And when you understand your methodology and what you need to do and how you're going to set up your trades, that's all you can do. You can't sit there and go, this person is doing this, I must do this. Or, contrarian, this person's doing this, it's so stupid, I have to do the opposite. Like just come up with your own strategy. And once you figure that out, trading gets a lot easier. It's a lot harder when you're sitting there and fighting everything all the time. And then not to mention looking at it all the time. Trade. Like I always talk to people, people talk to me about certain trades like my really big trades. I had a nat gas trade that was really insane, lumber that was really insane, oil, Bitcoin, I had a couple really big trends. And there's been many times in those trends where I've looked at my models and they're still long, and I want to rip that trade out of my portfolio so bad. NASDAQ, why I don't want the NASDAQ in my portfolio anymore. It drives me crazy. It's gone up and now it's going sideways. I want to get rid of the NASDAQ trade more than anything in the world. I'm seeing other things like energy moving. I'm seeing that yields might continue up. And my brain is telling me get out of the NASDAQ position. But also my brain told me to get out of the NASDAQ position months ago. It told me to get out of it at the beginning of this year when I started it. So I have to understand, like, I know for a fact my systems aren't going to catch a top or a bottom. We're trying to catch the meat in the middle. If I've been in that trade since the beginning of this year till now, it's well into profit. Also, what the fuck do I know that it might not go up another 20%? I have no idea.
Exactly.
So
exactly. I mean, it's up 40%, almost 40% year to day.
Yeah. So, we just don't know those things. So that's why it's important to be able to just kind of walk away, take your time, come back to it, shit. Well, you know what?
I think, I know we're recording this right now, but I think that we could create something where we take one, like just a piece of the conversation that we just had and like just nail down like one area of trading and like just talk about that every week. Because there's so much.
Just so people know, this is, we're just starting this out. If you guys want to leave us some comments or some ideas, that you'd like us to cover a little bit more, I would love that. We'd love to dive into that because we really like to educate here. Like I really like to teach people about trading, and we like to have real conversations, like just talking about real trading. Talk picks and stuff, like it's cool. And I'd have a lot more followers if I just talked about my picks and how great my trades were, and like, and I didn't tell anybody about the losers. But I want this to be real trading. I want to talk about losers and bad times and what's hard in trading, because that's what everybody's dealing with. People aren't just dealing with the market goes up every day and everybody's doing great. Maybe Twitter makes it look like that to people, but they're bullshitting you. Really, trading is hard. You're losing money some days. You're miserable some days. You want to throw, you want to turn your account off some days. Some months you're in the best road you've ever been on. It all varies and it all goes through phases and cycles. So just let us know what you want to hear. So let's run right into our charts now that we're here. First chart is Ian's chart, and it is a chart on silver. Now we know you have a bias already because you have a short position on silver.
Yes.
I have a bias, which is a long position.
Yes.
So let's talk about that. So
I think it comes down to time frames.
Of course, but
I think that's exactly what it comes down to. I look at silver. This is a monthly chart, and of course the most recent candle isn't complete. Not worried about the candle. I'm not trying to pull any kind of information from that candle. I'm just looking at all of that supply, from let's say 30 to 26. That downward sloping trend line there.
It's a lot.
Silver is still, it still has work to do. It still has work to do. I think it's incredibly constructive. You got that big base breakout in the summer of 2020. Absolutely ripped. It was like a direct line to that target around 26, 27, which is a fib retracement level. It's hanging in there. It looks good. It found support at those former highs from 2016. And if you look at the daily chart, and this is why I took a short trade on this, and this is kind of cute, and it's really not my style. But if you look at the daily chart of silver that I shared, it highlights an uptrend line. I don't know if you can, can switch to the daily chart.
Let me clean this up a little bit, and then I'll get over that. But you didn't put it
in the only reason I got long, or excuse me, I got short, is that the risk was really well defined, and it was a really small position. And it worked, and and I kind of, I don't want to give too much credence to is there a is that chart in the deck?
I don't know. Did you have a silver chart in there? I don't know.
I should have another silver chart in the deck.
Oh yeah, there we go. Let me get back to the other screen.
Yeah, because I want to see your take, and because I know you're long. And okay, so silver still holding above a year long upward sloping trend line. But I think it comes back, and it's retesting that trend line now. I think it come back all the way down to 2250. I think it's around 2260, 2275 for the December contract. But I was up at the top here, and I saw a reversal candle. I saw this long upper wick, and I said, hey, yeah, I can measure my risk at the top of that candle, take a small position, and it just moved. It's moved, caught a little, it's one of those kind of cute, I don't even know, I really consider it like a swing trade.
Yeah, I mean it's not even exactly a swing, but it's very short term.
Very short term, yeah.
That commodities, especially like when they start to move down, like the ranges are going to be larger. And if you find a range bound commodity, most of the time it bangs the top and the bottom of that range over and over again. Because people basically start to think the commodity is cheap here, commodity is expensive here. This is what creates those very tight ranges. And really, for me, like that's what I see as more of a long-term trader, is like we could kind of get into a situation here that we creates a nice squeeze to break out of. So let me see if I can figure out how to go back there.
So
we go back.
I look at this
one chart real fast.
Okay.
We see that false breakdown that you saw here. This is, for me, this is where I get a long-term signal. Major false breakdown. We start to get back over that resistance zone, and we're moving up. Now it's higher highs, higher lows, for both. So the trend, if you're looking at it in a long-term angle, a position trading angle, trend is up. Short-term trade, though, and not to mention looking at these old highs, it's a good trade to take a short-term bet on that it could go down a little bit. And so then you have, like you said, you have this nice reversal candle here that says, okay, short the crap out of that, because it's probably going to at least touch down to this trend line. And if not, it could go to 22, back to 22. And silver hasn't given anybody much of a reason to think that it's going to clear and break out of all of this. Our stop from the initial trade is literally right here.
Is it?
Yeah. So, I mean, it's literally to that point where it's either going to hold or not, and that's kind of like the thesis of gold and silver has been everything looks right now. Gold and silver are much stronger than they should be in this type of an environment. I could think and create a million reasons why it should go up right now. But at the end of the day, the price is going to dictate that. If we start to get down here and break trend, well, the trade's over. There's nothing more to talk about. We're still silver charts, right?
Yeah.
Okay.
In terms of this short little, I don't even know what to call this trade, but in terms of the short that I have on in silver, looking at price right now around 23 and a quarter, I'm probably just going to take profits today, and I'm not going to have anything to do with trading silver next week unless I get a decisive breakdown below 22.50, 22 and a quarter.
Yeah.
And then maybe I'll get short again, but that trade's over, and that's that's important too. We were talking, we opened up the conversation today about getting stuck into markets and trying to chase markets. Like, the trade's over.
Yeah.
Like, for me, the trade's over. I don't want to keep pressing this cute little short trade that, I just decide to take a swing on as it goes down and potentially hammers a confluence of potential support. That's not advantageous to making money. So yeah, interesting look at silver. I think they're vulnerable. I think you really laid it out in terms of gold and precious metals. They've been really resilient.
Yeah.
So many reasons for these shiny rocks to just roll over and break down, but they haven't. And the conditions do look really good.
Yeah. My macro models gave me the basics that, okay, gold and silver should also be running, like probably that was at the beginning of this year as well, a little bit, maybe the end of last year. Mm-hmm. The positions went on, but when we started to shift regimes and yields started going higher, I don't just pull off my position. I don't just go, okay, well, now, I'm going to pull off my position because my macro models have changed. The position's on. Once it's on, it's on. I'm going to walk away at that point. If it hits the stop, great. If it hits an exit signal, great, but I'm still holding it. I could have thought a million times this was going to get stopped out. I have no idea how gold and silver are still hanging on.
I know.
It doesn't even make sense. But once again, markets are forward looking.
Yes.
Well, no, in a year, why? Like there'll be something that will tell, and yes, like there's going to be somebody like, yeah, well, I could tell you reasons why. Yeah, no shit. I could tell you reasons why too. I have a million reasons why. But I'm saying in reality, what we're looking at is this market is still holding on, even though the environment is not conducive to silver or gold.
Yeah.
So when that usually happens, it doesn't always happen. When it usually happens, that means that gold and silver are going to run higher at some point.
Yes.
So I'm going to step out of the way, let the position run, see how it ends up.
I like it.
So your next chart is commodities versus bonds. My favorite one, man. One of my favorites. I could literally create. If somebody was like, you have like 2 or 3 things that you can use, this would be one of the charts that I would use for trading.
100%. 100%. Like this, like into 2020, like this was like the chart for me.
Yes.
Because I mean, I didn't start actively trading until 2016. So, I mean, commodities have been basing pretty much that entire time.
Yep.
Relative to bonds. And I mean, they're basically basing on an absolute basis too. And to see them begin to break higher relative to bonds was just like fireworks.
Yeah.
Alarm sales are going. I was like, whoa, we're inflation, here comes inflation, here comes rising rates, everything is changing. Everything is changing. And then look what happens.
To add one thing to that, you go back to 2008. I mean,
Yeah.
it's been in a downtrend. The only reason why in 2016 to 18 we see a little bit of run up in commodities wasn't because commodities were doing that well. It was because bonds were getting hammered,
Yeah.
at that point. So like basically you're talking about this whole time of commodities just being the major underperformer.
Mm-hmm.
And then now, like 2020 happens. Now everybody, here's a good thing we could talk about. 2008, everybody in the world thought commodities would be the next major run. They created hyperinflation. It was the start of quantitative easing.
Mm-hmm.
Hyperinflation is going to happen. It's the end of the world. Hyperinflation, hyperinflation, hyperinflation. What I thought at that time was a little bit different. I thought that they gave money to the banks. When you give money to the banks, you basically create and not to mention if somebody's going to write about gold, like I understand Basel III, that's a different thing. But if we're just talking about commodities and money and banks, all the cash going to banks like the whole, if they're getting paid, especially on their reserves, which that changed at that time, they're going to hold it, they're going to invest it, they're going to do different things in it than normal people. 2020 happens, more quantitative easing, but at the same time, they gave money to normal people. What do normal people do? Normal people going to take their money? Are they going to invest it, put it away for their children's, college something? No, they went out, they bought new cars, they made it rain, like all types of crazy shit. You talk to your friend, you'd be like, how you doing? Oh yeah, I just bought this crazy thing. I bought this TV. Why'd you buy this TV? I don't know, they gave me a bunch of money. Like, and then not to mention all the small business owners. Oh, I got a PPP loan. What are you doing with why do you need a PPP loan? I actually had an entire business in 2020 that was null and void, and that didn't give me a PPP loan, but I knew people who didn't even have an LLC who were getting PPP loans for like 150,000 or 200,000 or $1 million.
Wow.
It's insane. And so they were just throwing money out to people like crazy. It was nuts. So like, of course, that ends up in inflation. Right now, what has slowed down inflation? If they came out and said today that, hey, we know we've been screwing up lately, we're going to give people money, commodities would make another run to quintuple. And honestly, under the surface, they don't even have to do that. The Fed paused today. Commodities would put so much pressure on the market to be insane.
Yeah.
But the amount of money that they gave to people created that bottom. So when we're looking at this and going like, okay, 2008, why didn't that happen? That's the difference to me. I'm sure there's people who would say something different, but the big difference in it was that to me. And not to mention 2020 holding rates at zero, pretending that inflation doesn't exist. The Fed's always behind the curve. They're always behind the curve.
Yeah. Fed comes out aggressively, starts hiking, in the spring of last year. Commodities go nowhere relative to bonds, and they've gone nowhere relative to bonds since. Now they look like they're ready to break out again. Fed paused, probably going to pause again. Now they're keeping the door open for more rate hikes, and the more and more Fed officials that begin to speak up. I mean, it seems like the general consensus is that they will raise again before they cut. I don't know what they're doing, but it looks like commodities are ready to kick off, a fresh leg higher relative to bonds. In that environment, rates are continuing to rise, bonds are getting killed, and commodities are ripping higher. I mean, commodities are already ripping higher, and that's the thing. Like cocoa, orange juice, live cattle, feeder cattle, sugar.
Yeah.
It's an exhaustive list. Lean hogs look like they're ready to go. I really like the article that you shared the other day.
Which that would put a lot of people don't also put into context how important that is. Lean hogs being such a like pork in the United States, like I don't eat pork. I'm sure people do, but it's not as popular as it is in Asia.
Right.
In Asia, it's
Right.
huge, and we haven't seen that the pressure of that market come on yet. And that's the thing. Why didn't um cattle and feeders do what they are doing now in 2020? Well, if you're looking at that type of a market, you have to understand what they eat. Corn, soybean meal were really, really high at that time. So feed for the cattle was really,
Yeah.
really high. That keeps cattle prices down. Now with corn low, they've had room to run. So at some point that's going to reverse again. Like a great chart to look at if you ever take the time, people watching, is a chart of cattle and corn. You'll see they're very inversely correlated because it's the feed for the cattle. So now we're looking at it and going, okay, cattle is continuing to move, which has put pressure on all these other things. If cattle stops moving and even goes flat, corn's going to go to the moon, soybeans, and so on. Soybean oil has bottomed. Canola has bottomed. Sugar is making new highs all the time. Like you could go down the list and you're like, there's a lot of things in the commodity space that are running like crazy right now, and the dollar isn't weak at all. Like
No.
it isn't weak at all. So if the dollar got weak, if we actually started to see the Fed start to slow down or say they don't even have to slow down, they just start to talk dovishly. you know
Mm-hmm.
this is going so like you said, the interesting point you made, does that mean that the Fed's closer to pausing? I think everything in our market has been looking like the Fed's going to pause. Everything in our market is saying that. And really, if you look at it this way, oil prices, the CPI, do they really need it to go down to start saying inflation has come down or we start to hit our 2% goal? Not if last year, if oil was $130 a barrel, they don't, like it's so at a certain point, you have to understand, like if they can hold it around this level for now, and as we get towards that end of the year, starts to move up again, they're going to start saying they've done their job, because what the Fed looks at and what the macro like fundamental models look at is old news.
Yeah.
It works and you can use it because the Fed uses it, but really it's old news. So inflation from a CPI report, like if oil today started running, it's September, and let's say oil does 20% this month, that's not going to show up in the CPI report in September. It's going to show up in the next month and so on. So like you have to understand this is backwards looking. So I really think that was a good point of, we might be close to a pause. Not a real pause. In my head, what they're gonna say is, oh yeah, I think everything's starting to look good. And then the inflation is going to take off and they're going to have to go back to rate hiking again or whatever. But really, like, the thing is that I think they're not understanding is the world, the way it's constructed at the moment, with commodities, with the weather problems we're having, with all of the things we're seeing. And if you subscribe to my Substack, you see the weather stuff. I talk about it all the time. With the weather problems we're having and the amount of pressure the Fed has put on agriculture business and so on by raising rates so much, them keeping rates up here isn't helping. Like, it's not going to be a situation like orange juice. Like, you need more more oranges to make the price go down. The money for that doesn't just come out of nowhere. It
Yeah.
needs to come from the Fed lowering rates. Same with oil. If there's so many restrictions on oil, and not to mention you got OPEC, cutting all those things together. Now there's no supply. So commodities are a supply and demand driven market. As long as the supply is constrained the way it is, we're going to have these problems. The only thing they could do is start to open it up. And I don't see them doing that. That I don't see them going, okay, great, now it's time to go back on all of our climate plans, and it's not going to happen. So I don't know what's going to happen next, but I don't think the Fed raising is going to solve the problem.
No. No. This line, If this ratio is printing fresh decade highs, you buy commodities, you sell bonds.
Yes.
I think it's as simple as that. And we look to the stock market, focusing on, those I would say energy mostly. I really like energy. Let's see what happens again with precious metals and some of those metal and mining stocks. But look back to the past year and a half or 2 years when this line was absolutely ripping higher into its peak in 2022. Dude, energy was just an absolute monster. Just putting on a clinic on
Yes.
relative strength. I remember studying relative strength, and they usually last what, like maybe 9 to 12 months. Dude, it was energy for it seemed like 2 years. Like they couldn't stop. So
It was the end of the Q, and it's always interesting to go back to this one, which was Q4 2020, the election.
yeah,
Every single analyst on earth, if Trump gets in, buy energy. If Trump gets in, buy energy. If Biden gets in, you gotta short energy,
right.
over and over again. And like all the relative strength models were saying, like, buy energy, just buy energy. And so that's the thing why I think it's really important to be able to take like your politics completely out of it, your ideas completely out of it, like your feelings completely out of it, and just look at the charts and go, there's relative strength and energy. Like there was a guy when I had that newsletter for a long time, and I called it the Unsophisticated Investor Series. The reason why was I made some posts like, well, I don't know, it hit 100. I think I said, well, it hit 100-day high, so I bought it. And it had relative strength or something. And he said, like, there's no place for somebody as unsophisticated as you to trade these markets. And if I'm right, it was the energy trade. Like if I'm right, I think it was the energy trade, and it was spot on. Like it was the trade to have on at that time. I remember it being like oil gave a buy signal, it gave a false breakdown, and then gasoline followed, heating oil, energy sector, and then everything's just running, and it ran, like you said, for another 2 years. Really, energy really didn't break down. Like, yes, oil did, some of these things did, but the energy sector itself, the ETF XLE, that didn't break down. OIH is making highs, like it's wild to really think about, but like that's really sometimes as simple as it is. Like, yeah, I could come on and I know my stuff. Like I work with farmers and producers. I have to be able to give them good ideas, when to buy and sell things, and so on. So I have good fundamental ideas on things. But 99% of the time, if there's relative strength in it, if the trend is up, buy the damn thing. It's just going to work, or guess what? You got a small loss. If you have good risk management, you have a small loss. Oh well, call it a day. So let's go to the next chart, which is the 5-year note.
Yeah, so here's the sell bonds. Here's the sell bonds side of the equation. I've talked a lot about it.
He likes when we talk about selling bonds. People get very, very touchy about it.
Yeah, people get touchy about selling bonds, and it's. I guess I get it. I don't know. I just see markets. I just see markets that are in downtrends and look like they're on the verge of continuing that trend lower.
Yes.
And that's the thing. If the 5-year T-note decisively closed below, let's say 105.15, I think that's a sell signal for me. Targeting down near 100. It hasn't hit overbought in 2 years. So that's, that is the definition of a bearish regime. Like sellers have been in control of the 5-year treasuries for over 2 years now. Recently hit oversold. I can't find a reason to want to get long bonds. And I've tried on multiple occasions. late last year, early this year, and I wrote a note about, hey, it's time to bring bonds back into the fold and bring them back into your portfolio. Nah, no, I don't think so. The 30-year and the 10-year have already triggered sell signals. Hard retest on the 10-year, but it recompleted its topping formation. I think the 5-year it's set to do the same. We'll have to wait and see. Right now it's just wait. It's wait and see. Nothing to do here until we get a valid breakdown, and that's really important to understand. Same thing with the 2-year.
No, I agree. I mean, it's just I like earlier this year in the 30-year, some of the longer term ones, they started to give buy signals like earlier this year. It just didn't go anywhere. It was a losing trade. And then it's back over and they're back to short. I mean, it's just it's what happens in trading. Like you can't, I think that's the thing that you can find of someone who's a good trader to a bad trader, which is, I had somebody, as a friend of mine, but say something that was kind of nasty about technical analysis, which was like, oh yeah, like they'll have like head and shoulders drawn up and it'll be a false breakdown tomorrow. And it's like, and then it's a long signal. And it's like, yeah, that's exactly how that works. Like, yeah. Signal is something, but it doesn't mean you're like convictionless, wishy-washy trader. That's just trading. You have to get used to that you're going to be wrong. Like you're not always going to be right. There's many of your trades that are going to be wrong. You could have a good thesis, like, my idea was still inflation. Like anybody who knows me knows I still think we're in an inflationary regime.
Yes.
When bonds gave a long signal, I went long. That doesn't my thesis has changed. That means that it gave a signal and then it went back to short. And I was like, oh, okay, good. It's back to my thesis. Like, who cares? Like, it just doesn't matter.
Right.
It gave it, I've been short bonds since 2020. Like I've been shorting it this whole time. And so like small loser, 1% of the portfolio lost on a trade that's been short for, and if you look at that trade, you can probably put together how much that has gained in futures over time, not to mention across the curve. And so who cares about one small loser? And then you get short again and hopefully the trend resumes. It just doesn't matter.
Yep. 100%.
No,
that reminds me, I just finished my level 3 exam, my CMT level 3 exam. This is back in 2019. And I was still working in restaurants. I was managing a restaurant at the time. And I was bringing in a group of they were bus boys. And I was taking them through orientation. And I was giving them all their paperwork. And it turns out one of them had just graduated from the local university, studied finance. He was really into markets. And I said, I told him that I was into technical analysis and that I'd gone through the CMT program. We started talking markets a little bit. And he started bashing technical analysis and bashing chart patterns, and they don't work and this and that. I was like, I don't think you understand how to use them. I don't think you understand how to use them. Like, they're not going to tell you where price is going. They're going to give you a level to define risk.
Yes.
That's it.
That's it.
That is it.
All they do. That's
all they do. And yes, do some of them have a particular bias? Sure. But I mean, that bias isn't correct until you get a decisive break in that direction. Until then, like the 5-year T-note, who knows?
Exactly. No, great point. I mean, it's just so many people have like real problems with things, like I try not, like I don't have a real problem with fundamental analysis. There's just there's two different ways of looking at it, like I know that there's some fundamental traders who do really well. I know there's technical traders who do well. Until that's somebody who's just like, yeah, I've been trying this way of trading for 2 years and it just doesn't work. Like that's a different thing. I mean, probably be more like 5 years, but that's a different thing. Like some things might not work for anybody. Like
Yeah.
that's a bad trading methodology. However, like I know tons of technicians who make a ton of money trading markets. That'd be stupid to say that chart patterns are stupid, like whatever. I know that it's kind of how they're taught though. Like people are taught those things.
Yeah.
That's not something
Yeah.
that they're born with, like you're inherently you went to school and they're like, oh yeah, look at this chart pattern. I went to school for accounting. I could read these things. Why would I use this? I'm so smart, like that's
Right.
that's a different thing. That's your own ego telling you those things.
Yeah.
My brain tells me because of using it that there is no better way to understand and define risk than a chart. I don't know anybody in the world who's a trader out of all the traders I've known fundamental, technical. I know guys who don't use either of those and they just use the weirdest shit you've ever heard. However, they all make money. How do they all make money? They define their risk using
Yes.
the chart.
Yes. Right.
Think
I love fundamental analysis. I think it's really interesting. I don't spend a lot of time on it. I try to spend most of my time looking at charts because at the end of the day, price is the only narrative we have to get right.
Yeah. It doesn't matter if the stock is going up and you're bearish on it. That doesn't mean you're going to make money being shorter. It's going up. It's going against you. You lost money.
Yeah.
The price is going up on, you're looking at the energy sector and it's like, oh, it's breaking out. Like you could create a million fundamental theses for things, but the price is the price. That's the most important thing we're ever going to learn about markets. So you have the energy sector here in the 10-year yield. Ooh, that's a dicey chart there. Somebody's gonna be.
It is a dicey chart. So what's going on here? I mean, are these just continuation patterns and underlying uptrend? It looks like it, but I mean, let's see what happens here. Let's see what happens here. Just like if you drop, like looking at that the yield in the top part of the chart and the candles, my level is actually lower. You see all those contact points down around 4.
Yeah.
So it kind of broke out for me there, and that's usually what I do. Whenever I'm looking at a chart, I want to find the level that's getting the most action, right? Where and ensure that the traders don't actually step in and buy and sell yields. I know, I understand that, but still, nevertheless, I kind of saw that as a breakout already, but it's got to hit new highs, and it's just not there yet.
It's coming. It's coming.
It's close.
Next chart is $1. Broke that parabolic trend last year. That's when the market started to move up with it. When the market bottomed as well. And now we're looking at this major level here of 105.14. The breakdown level, it like gave the biggest false breakdown ever. That was a great that was probably the worst false breakdown I think I've ever seen, where it's like it's not a normal like breakdown where that is bad. Usually like something that just moves in a huge trend and then just shoots over a level. Like most of the time those are false breakdowns. This, however, was consolidation from the beginning of this year all the way to July. It broke down in July and then reversed in a straight up trend all the way back up. What are you seeing here on the dollar?
And I love that you bring that up, like the fact that it failed to make a higher high in May or June. And I think we were talking about that. You referred to it as a fallen angel pattern.
Yes.
So I mean, it looked like it was about to break down. That's a sign of sellers stepping in, pushing the dollar lower, just weakness. And man, did it turn around.
What a kick in the teeth. But that's really the dollar though. Like that's really like what I always talk about things in general, like, and especially like I talk about the characteristics of certain assets. Characteristics of the dollar, it normally is this fake out thing, when it looks like it's dead, it's not. I even called out the trade on it, which was if it does a false breakdown, you should buy it. if you're especially a short-term trader. But damn, it
Yeah.
really gives it a fallen angel pattern, bounces up and down. And I don't doubt it actually goes lower now because now everybody thinks it's going higher, you know. Positioning also got crazy to the downside. Now positioning is crazy to the upside. I mean, it just continues to kind of ping pong off of this. The only thing I am saying that's kind of even crazier, it like you saying, it's hit oversold. Now it's at
Yeah.
overbought. What the hell is going on? You
When I
know,
usually see something like this, I move that 70 to 75, and I
yeah,
move the lower bounds from 30 to 25. You know, there's some like, you know, exotic currency pairs that you kind of have to do that with because they're just all over the place.
yeah.
But yeah, wow. I mean, it's tug of war. It's tug of war right now between the Bulls and the Bears.
You would just never think it would be that crazy in the dollar. Like a move like that in a currency from oversold to overbought, it's so rare. That
Yeah.
is so rare in a currency. But it's doing it, you know. So it's kind of in this bearish regime, straight back to bullish regime. Like I've got to see what comes out of this at this point.
Yeah.
Like I've got to really wait now and like, you know, like I said that to me this week was going to be the week I was just going to sit, and if it started to get over that 105.14 level, I'd be having to shift some things. Like the models would start to move differently. However, the commodities aren't saying that. You know, this is what's really crazy is the commodities are still holding up really well and they're still moving. So most of the time, I don't trade the dollar itself. So
Mm-hmm.
if the commodities are sitting there and continuing to move, I'm trying to figure out the dollar to figure out what's going on with commodities. But the commodities aren't giving sell signals. They're not even backing off. Like I don't understand yet. You know,
And,
like
you know, and
more.
that's the way it was last year, or you know, when the dollar really started to rally in, was it like May, June, middle of 2021, and
Yes.
and commodities did not mind one bit that the dollar was starting to rally. And as that dollar rally really started to take off, it seemed like energy was the most resilient. And then it started to I guess the strength started to dissipate, and you know the narrative was more like looking for pockets of strength within the commodity space, and there was,
Yeah.
you know, different areas started to pick up. You know, even cocoa started picking up last year.
Mhm.
Sugar, um, you know, pounding the upper bounds of that range heading into to 2023. But yeah, so it'll be interesting. It'll be really interesting to see what happens here.
And the
You know,
commercial
I'm
buyers are coming into the other end of it where, you know, I have my COT index is at 100% now, meaning that COT, the rate of change of the commercial buyers is starting to step in for the euro now. Like it's like, what the
yeah,
hell is like, you know, like I'm just kind of just watching all this at the moment and going like, this is interesting. You know, it's time to really kind of sit on the sidelines and watch and try to figure out what's going to happen next. But things like the Canadian dollar, like that looks really, really interesting. Maybe not something to buy just yet, but it's looking interesting. The
yeah,
NBC dollar, same thing. It's looking
yeah,
interesting. So, like, you know, there's all this commercial buying in these things. I'm not understanding exactly what's happening just yet, but I'm starting to think, you know, as much as I'm looking at the dollar and going like, I'm not jumping in front of the freight train,
hmm,
anything can happen here. I wouldn't
yeah,
just write it off and go, it's going right back up to all-time highs or something. Like I would just not all-time highs. The dollar isn't an all-time high thing anymore.
no, but I mean, even just like last year's high, last year's September high. I mean, I think that's a huge move.
Yeah, that's a huge
Back up to 114. That's a really big move. That's a tall order.
currencies act much differently than other products. The levels that we all see on other things when they break through them and they don't come back, currencies are very mean reverting most of the time. They
Yes.
come back a lot. So, you know, I don't try to overread moves like that, but I do know that it's happening. And I am like, okay, the dollar is getting into a bullish regime. You know, if I was trading the dollar itself, I would be long it right now and call it a day. So next chart is the euro, 57.6% of the dollar. And yeah, we had a trade in the euro from last year into this year. It went really well. Got stopped out, I think 2 weeks ago now, around this level. And now it's kind of moved all the way down to here. Like I said earlier, we have the COT coming in and giving a buy signal on the index. The rate of change has been a lot. So we'll see where that ends up. But also, here's an interesting thing you have here. It didn't hit oversold. That's interesting. And most of
Very
the
interesting.
time I noticed that just from like memory, I haven't back tested this, but this is just memory. I noticed that when the euro doesn't go as low or make the same move as the dollar is making, I mainly can see that usually turns into the euro being a little bit stronger. So right now, if we're seeing that, the dollar took out this low technically if it was the inverse.
Yes, absolutely, 100%.
This didn't. So maybe we'll see this hold up. Maybe that's a sign there, but right now there's nothing to do either way. Not a buy by any means, but just an idea to keep an eye out and see what happens next.
Yeah, and it's not taking out those lows heading into the close this week. At least not yet. I know we still got a little time on the clock, but
next week will be important. I think, for me, when I'm in these months here, when I'm in September, or basically from June till September, even to mid-October, I don't take the moves that seriously that is happening. The market is going to be choppy. There's not as much volume coming in. Traders aren't as aggressive. There's a lot of things that are happening in those months to keep in mind that you don't know what's really happening in the markets. So we'll really know more by the end of this month. The end of this month will tell us a lot. So the next chart, I'm on to my charts now. We're on to the NASDAQ and small caps. So I found this interesting because I've been thinking in my head lately, like, wow, the Russell really looks like shit. I think that every day. Every day I look, what the hell is going on with the Russell? It looks like garbage. And I know the construction of it has changed a lot over time. It used to be a lot of healthcare and financials. Now it's a lot of tech. Even the healthcare and financials, it's tech, healthcare, tech, financials.
right.
So we're kind of seeing that change. But here we're looking at this, this is the dot-com bubble all the way on the left side. You see it roll over and then based forever. And then started to break out and move, around 2008, 2009. The leaders were tech for, until now, basically. It did come back a bit in 2020 to 2021, into 2023. And now we're seeing it take back off again. This is part of the thesis that got me long tech. And now we're seeing, and this is why I shared this chart today. This made a new high, not a new all-time high, but a new high for the year. Probably 52-week, yeah, if I was to guess. This has been the same arrow and the same to be continued since it's been down here. But it's still like, this is kind of interesting here. Like, what is, as much as I want to be bearish on tech, I have every reason in my brain to be bearish on tech. It hasn't given me one yet. Like the charts aren't telling me to get bearish on my long-term positions. Short-term, sure. You could make an idea or a thesis for that. But long-term, just not seeing it yet.
Yeah. I mean, the strongest trends, they perform well on absolute and relative terms. And that's a move. That's a move. NASDAQ relative to small caps. And man, it's hard not to want to own large cap tech right now.
Yeah. It's just a simple, I'm seeing relative strength running into it. I see that it's continued to run into it. The trend is still up in the long-term primary trend. That's it. It really really isn't more than that. I'd love it to be more than that and sound smarter to people, but that's really it.
As rates start to rise,
As rates have been
as rates look like they're going to break out, as bonds are giving you sell signals, buy tech.
I'm I get so confused sometimes when that shit happens still. Like 20 we talked in 2022 and I was short the yen that whole year. And short bonds even, all that stuff, like it didn't make sense in my head.
Yeah.
So, like, why in the world are we supposedly the market is in a downtrend? We're certainly possibly in some form of a recession. Everybody's losing their mind. It's fear, fear, fear all over the world. And I'm short the yen and short bonds. I feel like an idiot, like honestly, like it feels like completely counterintuitive. But once again, it was the trade. It was where you wanted to be, and the only thing that said it was the price. Next chart is semiconductors. So just pointing to this, I see that there's a lot of people pushing around the NVIDIA. NVIDIA is great. NVIDIA is shit. NVIDIA is this or that or whatever. When I'm looking at this, I'm just going, NVIDIA is in an uptrend. NVIDIA, like if you want to look at their earnings and all that stuff, great. But for me, I'm trying to really understand the sector as a whole. I want to know what's being held inside of this sector. I want to also understand semiconductors and the price action of semiconductors because it leads the market. If it's going to go down, it's going to lead it on the way down. If the market starts to get weaker like it did in 2021 and is going to possibly go into a downtrend, I want to look at semiconductors for the hints of that. It turned over a little bit before the market. That's also important. So, and also spike bottomed here, then and continued to move up. That's also important. And it's led the market the whole way. So you got to have semiconductors on your sheet, even if you're not trading it. You just have to understand what it's doing.
Exactly. I'm looking at the hold on one second. I'm looking at the holdings right now. NVIDIA is 20%.
Yeah.
NVIDIA is 20%. But yeah, these are as cyclical as it gets. We like to look at semiconductors as modern day transports.
Mm-hmm. Yes.
And kind of use it as a kind of like along with like kind of the old the Dow theory tenet where transports confirm the averages. We like to look at SMH and look at semiconductors and see whether or not they're confirming the action that we're seeing, not only the NASDAQ 100 but also for the Dow and for the S&P. And they look good. They look really good.
It's just holding up, and like once again, like we're just sideways here. And if we started to break these lows, things would change, like that would be to my exit signal was actually right here. I actually posted it on my Twitter. My exit signal was literally right under this, and it held up. So once again, if it starts to break trend, it would get to neutral here. It would start to be a short here, so that's just how it works. I'm not trying to catch this bottom and get out right here. I'm trying to catch this move in the middle, the meat in the middle. It's the easiest part of the trade. The hardest part is to catch the bottom because you'd be buying here, 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 and here and here, and then you'd be like, oh, I caught the bottom. When really I'd rather wait for it to go up, and instead of blowing myself up on the way down, I'll just try to catch here. Maybe I got stopped out here if I got in too early and you had a little tighter stop than me. So you get stopped out there. And then you put the trade back on, let's say, and now you're just running. It's a much easier trade than trying to guess the bottom.
Yeah, guessing the bottom it will deplete your mental capital for sure.
Yes, absolutely. It will drive you fucking mad. Is another way.
I
Um,
don't know. I'm looking at URN right now, and you know what? It's funny. I'm pulling up Koifin. Shout out Koifin.
mhm.
Um, I didn't have my premium account for like 3 days,
Oh,
and I didn't realize how important Koifin
it's
is in my day-to-day life. Uh, Almost lost it. Anyways, I love using it to get into these ETFs very quickly. Look at what the components are, and it shows you a great 1 month and year to date or just holding, excuse me, um, kind of a scatter plot, which is great.
Mhm.
Um, but yeah, URNM looks a lot better than URA.
Yeah. So I started using URNM a couple years ago. The holdings are a little bit better. It's a little bit more diversified. It's
Mhm.
a much better ETF, I think personally. And people, I'm not as I know a lot about uranium. I know a lot about uranium mining, but everything I know is mainly on a macro sense. So I don't understand exactly what CCJ is doing every day or their operations or something like that. But I
Mhm.
know that the companies inside of URNM are much cleaner companies. They're balance sheet wise, what I'm talking about, cleaner, and they are just a little bit more diversified than URA. Because I used to never buy the uranium ETFs, I would just really trade CCJ and like one or the other majors.
Yeah.
Now it's like I will buy this ETF. This is a much better one. I really do like this chart. I like my favorite type of setups are the squeeze setups. Band squeeze, low volatility, something making a triangle. Like
Yeah.
most of the time, that's going to be as easy as it gets. Your stop is going to be tight. The if it is going to make a move, it's normally a big move. Things don't just stay in a very tight range forever, especially something as volatile as uranium miners.
Mhm.
So far, this has been a really good trade. The stop is just got into profit, so that's cool. For now, we're just going to let it run and see where it ends up. But uranium's been there's so many things going on with uranium all over the world at the moment. I have a really good write up on my Substack too for that. Just basically going over like all the positives of why this trade should work out, what's going on, the companies inside of it, what are the deals that happen? Because CCJ is a huge part of the ETF. It's going to drive the ETF. We have deals, going around the world with CCJ right now. This could be a great trade coming up in the future.
Absolutely, I love it, and I love CCJ too. Do you trade? And you mentioned that you only trade a couple of uranium mining names, but I was going through this list earlier. So I was looking at your charts. There's some great, just tiny, tiny companies
Yes,
in this ETF, which I like because you can trade the ETF and get exposure
the very tiny companies.
to some really tiny companies, but it's you get that balance with some of the bellwether, with the bellwether, and with some of the more stable companies, which I think is
Yeah.
great.
I mean, it's uranium, so you're never going to like find that the ETF just has a bunch of very large names because there are. Even CCJ wouldn't be it'd be a small cap. It's not none of these are very very large names. That's kind of like but it's even the space is even smaller than like a gold mining type of ETF. So you're going
Yeah,
to see like a lot of really small companies in there have some exposure to it. Um, we'll see where those all end up. But so far, that trade's been good. It's to me once if the trade meets a trade isn't a good trade just because it's making money. It meets all your requirements. It's within your methodology. You put it on well. You got a good stop. To me, that's all the hallmark setups for a good trade, and that's one there for sure. Next chart is March Sugar. Um, I posted this chart kind of recently too, and before it broke out, talked about that major reversal bottom we were seeing. That was a cool reversal bottom candle that we saw the other week. Now it's gapping out. That's really cool. That's week to week gapping at the beginning of the week. That's a very good pattern. So, gave a little bit of it back today. I think it was down about 1% or so. But we're also seeing, sugar has so many things going its way right now, and cocoa, all of these, that I couldn't really like make a reason why you should short sugar. Most of the time, any trade I'm in, I could give you a thesis why you should be long or short. I couldn't give you any reason to be short sugar besides price up high. I don't like it. You should short it. Like that's the only thing I could think of somebody saying that would make any sense, which makes zero sense. But there's just no reason to be short it. It's some people think when things are high, they got to short things. That's ridiculous. You should never do that. This has every reason to be long.
Full disclosure, sugar ran up and hit my initial target. And I don't even know what extended really means, but I had this sense that it was extended, and I was looking for an area to maybe have another cute trade similar to the silver trade. I think during this process, we're gonna get out all of my negative
character.
My poor trading habits are going to be exposed. Anyways, didn't work out. I have no business, or I have no desire to short sugar right now. I just have no desire to short sugar. And in the market, in the charts, aren't giving me any reason to short sugar.
No. It's a perfect setup, and I think a lot of people, when they look at commodities in general, they don't understand how much they can run sometimes. Like you don't want to be on the wrong side shorting a commodity. Like something like equities, most of the time they're going to pull back at some point. Sometimes commodities, I don't know when they're going to stop. Like there's times where they just run and run it. I mean, look at live cattle. Look at some of these charts. Like there isn't many pullbacks because the news flow that's in all the other markets. It's just not there. You don't got people panicking about the Fed. You don't have people going, "Oh my God, this is going to happen." It's people going, "Oh, here's the supply and demand data. There's no supply. There's a ton of demand, and they're buying like crazy." Like that's it. That's all there is. So you don't want to be on the wrong side of a commodity.
No.
Now we're into the fun stuff. Now we're into heating oil.
There we go. Which heating oil is the same as diesel, correct?
Very similar. Yes.
Okay.
A little different, very similar. But heating oil, if we're looking at this chart, I really hate falling wedges and rising wedges. So apologize for people drawing that in. It just was too perfect to not draw that in. Reason why I hate them is because I think too many people start to think like it has to do this because it's in a falling wedge, or to me it's like it's in an uptrend or a downtrend. Sometimes it breaks out of that and moves up, great. Sometimes it's a low volatility downtrend. That's what creates wedges.
Well, I mean, it fits.
Yes, and if it's,
I mean, it's falling in the direction of the underlying trend, and it's resolved. Yeah, I mean, looks good to me.
And so it's a good falling wedge. It's just I don't like to use them for my own biases, basically.
Yeah, that's good.
And so if we're looking at this though, what was cool about it and why I did draw it in is that we had a falling wedge right to this major volume support. Something I talk a lot about is volume support. Like support and resistance lines are cool. They're fun to draw, fun to put on your charts, but really, they have to be pretty wide. Volume bars, however, whole different story. They're already pretty wide because they have to take a certain level from a certain area, and they will show you where things are going to pull back to most of the time. It doesn't mean I'm ever going to buy something just as it's crashing to that zone, but it does mean I'm going to be more interested once it starts to break out of that zone and give me a buy signal. That means that I am going to get long it. And heating oil, why I wanted to show this chart in such a long-term version of it, everybody talks about oil and the run it had. Nobody talks about heating oil, which had a bigger run. That's you're talking, what is it? Just over 50 cents, 55 cents probably to $5 near the top. So I mean that's it's a 5x trade, 10x trade. Sorry, my math was bad. Yeah, so I mean you have this huge, massive trade here. Like it's absolutely wild that nobody's talking about. Because it's a product that doesn't really, many people don't put on their, even futures traders, they don't really trade it.
Mhm.
But heating oil, I think, is incredibly important. And once again, like when those things trend, they trend. As you can see, it started to move off that bottom, had one pullback, and then just ripped higher. Had one more pullback in 2021. Like, so you're talking about like, a pullback or two a year. That's wild to think about. And then it just continued higher and higher and higher. I mean, it was a wild trend, and then it pulled back. Now it's starting to move again, and it's not having many pullbacks all over again. So we're going to see where this ends up. But heating oil, I always think, is a good thing to have on your charts, a good thing to pay attention to. Great vehicle. And it also confirms what's going on in energy. The most important thing is it's confirming energy is in an uptrend, is moving nicely, is really turning out to be a really awesome trade here.
Yeah, it supports higher prices in oil. And what's interesting too is noticing that heating oil likes this time of year.
Yes.
I mean, look at September 20, September 21, September 2022. Last year was a little different, and look now, starting to take off. So this is a great time of year for heating oil futures.
Yes. I just think that in general that so many people, you got to pay attention to all of these things. You got to pay attention to heating oil, diesel, gasoline, oil, across the board. Pay attention to it. Doesn't matter whether you trade it or not. Make sure it's confirming each other. Most of the time, it's not that you have to be long all of them, but confirming each other and understanding what makes the products move and so on. There's a difference between products that are refined, the original oil, and so on. Just understanding those subtle differences and the shape of the curve in the futures market and so on. All those things are important. Google those things if you don't exactly know what I'm talking about, but we're going to do a video on that at some point too.
Yeah, absolutely. I look forward to that. What's your favorite energy product to trade in the futures market?
You're not supposed to have favorites.
I know, but do you have one? Do you have one that
It's definitely heating oil. It's always been heating.
Like heating.
Yeah, but it's probably just because I've had some good trades in heating oil. So
Right.
But I try not to have that bias, but I know that's there. On the long end, the short side, I think it's just because it really trends. Like a lot of things when you buy them or sell them, sometimes they move well, sometimes they don't. But heating oil seems to really trend and move well. News flow is even lower than oil. So like if oil's still, most of the time you can see if you're looking at heating oil and it's moving nicely, like it has been this trend recently. And like let's say oil and gasoline are kind of chopping around because there's a lot of news flow for oil and gasoline. That usually means that oil is going to continue on the run. So I do think, because what heating oil is trying to say is that oil is going to continue to run as well.
I like it.
And so last one here, Ian and I talked about making this 30 minutes. We definitely hit our goal. Good job, Ian.
2 hours? Are we working on 2 hours right now?
It might be. I don't know. If anybody's
we might have to regroup and do this next week.
Yeah, we'll do it. Yeah, we'll do better next week, guys.
Yeah.
We'll get to maybe an hour next week. So last chart, we started to talk about all that stuff at the beginning. That's why we do it. Just kind of, I guess we got to just nail the charts and then go from there.
Yeah.
Maybe make 2 different videos. We'll make 2 different videos next time. U.S. crude oil days of supply, including strategic petroleum reserve. This was from B of A today, and yeah, that's that's saying something. And I like, to me, the supply and demand data is important. Obviously, the price is the most important, but the supply and demand data is important. You have OPEC doing what they're doing. You have this situation building up in the States. it doesn't mean it's the end of the world, but it does mean that oil has a lot of energy behind the trade. And that's something that I try to like think about a lot if I'm like looking at a trade and kind of interested in something. Think about the energy behind it. Think about it this way: the S&P 500. If the VIX is at 10, there isn't much energy behind the S&P 500 to go anywhere. The VIX is at 30, there's a ton of energy. There's a ton of more risk, but there's a ton of energy for the S&P to move up there. Um, the fundamentals here are saying that there's a lot of energy for the energy space. The energy space has a lot behind it. The supply and demand is working out its way. The underlying products are working out the right direction. There's just so many things going on right now. The yields are going the right direction. Everything is going the right direction for energy at the moment, and it isn't overbought yet. It hasn't really gotten into a major trend yet. It's just kind of, this is really the first inning of it. If this is going to move, this is the first inning of it. So we'll have to see where that ends up. It's going to be a pretty interesting trade any way you look at it.
Yeah, I think this is wild. This is a great chart. I love this. Yeah, it's gonna be very interesting. I can't and it's funny we can look at charts. We look at price. We're like, oh wow, looks like energy's setting up. He's checking all the boxes. And then we see something like this, right? It's just like, wow, okay. So there's some fundamental, there's things going on beneath the surface that could really catapult this market higher. I mean,
Yes, I think that's what's important about it too, is you conviction isn't a thing you're born with, it's a thing that's built. And so you build conviction by looking at things like this and understanding, like, you got into the trade initially. How do you stay in it? How do you build that conviction to want to stay involved in something that's as volatile as oil or heating oil or any of these things? This is how, you see these things coming to you over and over again. Now, once again, like, I'm not going to change my position based on whatever this says, but I am sitting there and knowing, like, there's a lot behind this trade. There isn't just one thing. I'm not just, looking at it and going, okay, well, the price is up. There's a lot of things behind this trade right now, especially when you're diversified across all the sectors and different oil, heating oil, gasoline. You go to China, go to Europe, whatever. There's Brent, whatever you're long at this point. You're seeing so many things, kind of a confluence of data, just kind of pushing the fact that oil is nowhere near done here.
yeah, absolutely.
Well, all right, Ian, I will let everybody go with that. Thank you so much for coming on, dude. It was a blast hanging out again, and we'll talk next week, and we'll try to make it shorter, everybody.
Sounds good. Thanks for watching.